Hello, I'd like to welcome you to this Zoom meeting, which has been recorded to provide additional commentary and explanations to the information that was written in the reports for the 2019 financial statements for the Canadian Conference of Mennonite Brethren Church of North America and CCMBC Legacy Fund. My name is Jim Davidson, and I am the Chief Executive Officer of CCMBC Legacy Funding and CCMBC Investments Ltd. I will be the host for the meeting today. I am joined by Howie Wall and Michael Dick, who are members of the CCMBC Executive Board, the CCMBC Finance and Audit Committee, the directors of CCMBC Legacy Funding and CCMBC Investments Ltd. We're also joined by Bertha Dick, who is the Chief Financial Officer for Legacy and for CCMBC. For the ease of discussion, I will refer to the Canadian Conference of Mennonite Brethren Church of North America as CCMBC, CCMBC Legacy Fund, Inc. as Legacy, and CCMBC Investments as Investments. Our objectives for today are to provide you with additional information relating to the reorganizations that were finalized in 2019, and to provide supplemental information relating to the 2019 financial statements and related reports, which have been posted on the CCMBC website. We will do this through an introductory narrative and a series of questions and answers, which is very much like the discussions we had during the various board and committee meetings that were held to review and approve the financial statements. Before we begin, Bertha, would you be able to tell us what the link to the 2019 financial information is, and will we be able to attach it at the end of this report?
Yes, all written and video reports can be found on the CCMBC website at www.mennonitebrethren.ca/2020 AGM. This web address will be posted at the end of the video.
Thank you, Bertha. This will give our audience a chance to have the documents in front of them if they wish to have reference points to which we'll be talking about today. Michael, will you be able to give us a short history of the journey we have been on over the last number of years?
Yeah, Jim, the journey began at the gathering in Winnipeg in 2012. It was at that time that CCMBC was directed by the delegates to develop a model whereby all aspects of the organization would be in compliance with our Charter of 1945, the CRA, and the security commissions in whose jurisdictions we operated. The principles we followed were to meet the compliance directions and adhere to our ministry direction of supporting MB churches, pastors, and other MB entities. The underlying theme was that we wanted to do this right and not necessarily fast. We never envisioned at the time that it would take almost 7 years. Jim, tell us about the significant developments that occurred in 2019.
2019 saw the completion of this journey with the incorporation of CCMBC Investments Ltd, a for-profit entity which is 100% owned by Legacy, and which has the mandate to obtain and manage investments from the public with the assistance of a registered exempt market dealer, and to manage the church and pastor loan portfolio in-house, and then manage the investment of the surplus funds through a registered portfolio manager. The details of this reorganization are included in the company's offering memorandum, which can be found online in a system for electronic document analysis and retrieval, which is, the acronym for that is CDAR, and it can be found at cdar.com. The results of our first 4 months of operations within investments resulted in a deficit of $322,095, which is primarily a result of the operations of transition and startup, as well as some of the one-time costs that we incurred. This deficit is approximately 0.2% of the promissory notes which are outstanding, and this is really quite a minimal amount for the year. On December 30th, 2019, the remainder of the stewardship assets and liabilities were transferred from CCMBC to Legacy, concluding the journey that began in 2012. The details of this transaction are reflected in the 2019 audited financial statements of CCMBC and Legacy, and the accompanying financial statement reports for each entity. So as we enter 2020 in a more stabilized operating environment, we have 3 entities, each with a specific set of functions. Investments, as we noted above, is responsible for the investment activities, lending activities, and reinvesting activities. Legacy is a nonprofit charitable organization and provides accounting services, payroll services, benefits, pension administration, infrastructure support, facility management, and general administration to CCMBC, churches and partner agencies, and investments. CCMBC remains as the nonprofit charitable organization that is a principal organization of the National MB Collaborative Model. One thing I want to be very clear about these reorganizations, that the result is that we have allocated what we had previously identified as stewardship from CCMBC into Legacy and investments. CCMBC is the sole member of Legacy and provides direction to Legacy through the Legacy Board. This will be an important governance principle as we move forward through 2020. So that brings us to the end of 2019, the reorganization. Now I'd like to ask questions relating to operational results and the impact on CCMBC. First of all, Howie and Michael, as board members of CCMBC and Legacy, what did you and the FAC do to oversee and ensure the reorganizations were properly conducted?
We engaged KPMG as project consultants and the law firm Fillmore Riley to provide the expertise we required in the transition process. They were part of our team as we navigated all the legal and accounting issues of reorganization.
We established a project team who then developed a work plan to guide the reorganization. Howie, as chair of the Finance and Audit Committee, was part of the team, and he kept the Finance and Audit Committee and the CCMBC board informed. And then he also carried the concerns of the board back to the accounting and legal team.
The Legacy board reviewed the drafts of the offering memorandum and were able to ask the legal and accounting consultants questions to ensure we had a full understanding of the new structure and policies that would guide the transition of the stewardship fund to investments.
Thank you, Howie and Michael. In 2019 was the first year that we had non-consolidated financial statements for CCMBC. We now have 3 separate entities. Was there a process established for our auditors to ensure that the reorganizations and all of the transfers of the assets were appropriate?
Yes, we met with the auditors to establish an audit planning process that would assure us that the process of transferring assets between the entities was completely and accurately accomplished. At our post-audit meeting with the auditors, we reviewed the process we had established, and they were able to provide assurance that our statements accurately and fairly represent the financial position of each entity as of December 31st, 2019.
Thank you, Howie. Moving on to the results of operations for CCMBC, Bertha, could you provide some additional comments relating to the operating results and to the financial position as of December 31st, 2019?
Sure, Jim. At a high level, the operating results on the CCMBC audited financial statements include all ministry operations for the year, as well as the stewardship operating results for part of the year. That's until the assets and liabilities were transferred to investments in August and to Legacy in December. This makes the 2019 results very complicated. A quick overview of the operating results show a deficit of $3,120,000. This reflects a surplus in stewardship operations of just over $1.5 million. And then there was the donation of stewardship assets and liabilities from CCMBC to Legacy of $4,073,791. This leaves an operating shortfall of just over $557,000 for CCMBC ministry operations. A list of the variances from the budget that make up this $557,000 shortfall, along with some explanations, can be found in the document on the website. The document is called 2019 CCMBC Ministry Operations Commentary. I'll just highlight at this point that the support received from churches was almost $74,000 below budget for the year. The statement of financial position reflects what is left in CCMBC operations after the transfer has been made. After amounts that were payable at the end of the year and some restricted items are taken into account, CCMBC is left with a deficit in unrestricted net assets of almost $1.6 million. About $481,000 of that deficit is attributed to the ministry division, while the remaining $1.1 million are attributed to stewardship, transfer, and operations, which will be addressed in 2020.
Bertha, that's very helpful to understand the CCMBC financial position. What can you tell us about the operating results for Legacy as of the end of 2019?
The operating results on the consolidated financial statements for Legacy show a deficit of approximately $777,000. Various factors contributed to this deficit, including some one-time startup costs, some loss of investment earnings due to the timing of the transfer of investments between investment firms, as well as an additional allowance for credit losses on loans. While we are required to do the evaluation of credit losses on an ongoing basis, we expect that the results of this will have less impact in future years. And we could see some recoveries of those amounts as payments are received from underperforming loans. This deficit is not unexpected for the first period after the reorganization. More details on all of this information can be seen on the reports found on the website.
Thank you, Bertha. And it's really difficult to be able to verbalize the complexity of what has occurred in 2019. Getting back to Howie and Michael, the financial statements show that the reorganizations had an impact on both the operations and financial position of the conference. Can you provide some comments on how the FAC and the executive board viewed these results?
Well, Jim, it was very difficult for the board to accept that not only did we have a significant ministry deficit in 2019 again, but that the separation of assets actually disclosed a cumulative deficit within CCMBC of an additional $1 million. The ministry deficit is the result of what the board viewed as a moral obligation to support Multiply in costs with the associated C2C demerger, higher than budgeted travel costs related to the Multiply crisis, to conference restructuring, and the fact that church contributions continued to decline, as Bertha indicated. As we look to the future, the board is committed to no further ministry deficits for CCMBC, which we know won't be easy given the current impact of a worldwide pandemic. We also want to work with the provinces in implementing the collaborative funding model. With the restructuring complete and a non-consolidated financial statement, it will be much easier to track CCMBC income and expenses.
The FAC, together with Legacy Board, have established policies regarding reserves and transfer of funds that ensure the viability of our operations in both investments and Legacy. Ministry funds from Legacy in the future will only be available for ministry purposes based on the previous year's financial statements. The 2019 legacy results means that there are no funds for ministry for CCMBC from legacy in 2020. We are fully dependent on our churches to support conference ministry provincially and nationally.
At this time, I'd like to thank Bertha and Howie and Michael. This has been a unique and complicated journey, and we've now reached a position where we can concentrate on moving forward for the kingdom. I am sure that there's still many questions that people may have in respect to the reorganizations, the results of 2019 operations, and how we will work through the challenges that we have in front of us. We thank you for taking time to view this video. And of course, if you have further questions, please contact any of us at the emails that we have listed below. We thank you, and we look forward to chatting with you at the AGM.